Endpoint security is designed to protect every device in your fleet, wherever it may be. These days, that can be a lot of different places. Find out how HP Wolf Security uses emerging strategies like application isolation, along with a zero-trust approach and framework to give you a powerful, manageable, usable solution to your growing and increasingly spread-out security challenges. Learn how HP Wolf Security can make a difference across your endpoints at securityweekly.com/HP Wolf. Hey everyone, this is Paul Asadorian with Security Weekly. I'm super excited to tell you about our latest partnership with Intel. Intel's vPro platform, you might have heard of it before, as it's been around for 15 years. IT and security teams have so many challenges, including trying to keep your computers up to date with patches, making sure all the hardware and software is working for your remote employees, and of course, keeping things secure as possible. Intel's vPro platform is designed to do just that, make it easier to keep your fleet of computers well-maintained, and as we all know, a well-maintained network is absolutely a more secure network. Join us for an interview with Yasir Rashid, Global Director of Enterprise Client Sales at Intel on May 12th as we explore the features and solutions provided by the Intel vPro platform. Visit securityweekly.com/Intel for more information.
Welcome back to Enterprise Security Weekly. Join Paul Asadorian and Rich Mogul on May 4th to learn how to choose the right architecture for your application. Live attendees at this webcast will have the chance to win a $100 Hacker Warehouse gift card. You can register at securityweekly.com/webcasts. Don't forget to check out our library of on-demand webcasts and technical trainings at securityweekly.com/on-demand. All right, and for our second interview today, Will Lin joins us to talk about the current state of the cybersecurity market. This is something I wanted to set up for a while, and me and Paul talked about setting this up for a while back when he was still running this podcast. About how it would be great to have an investor viewpoint on the show. Since we talk so much about M&A and fundraising and new markets and trends and things like that. And this will be the second time we've had Will on. And he is the managing director and co-founder at Forgepoint Capital. And Forgepoint is a VC that is entirely focused on cybersecurity investments. Not a whole lot of those, but we are starting to see a couple more pop up. And he's also the founder of the Security Tinkerers, which is a group that I'm a big fan of. I'm a member of that community. It's a nonprofit that brings together InfoSec professionals to share, mentor, create opportunities for the community and for the next generation of leaders in this industry. Welcome to the show, Will.
Hello. Thank you for having me, Adrian. It's always fun to have these conversations with you. Recorded this time.
Yep. Really? Yeah, absolutely. So many good conversations that go on that we never get to share. So today, I'm trying to figure out where to start here. So one of the things that we've been noticing is that there's some new categories in security, and I think starting out here, DSPM is definitely one of them, and I know it's one that you're pretty passionate about and you've gotten involved in. So DSPM stands for Data Security Posture Management, and it's I think it makes sense to kind of to latch onto that CSPM term. We're starting to see that used a lot because posture management does make a whole lot of sense, and it is related to cloud, I understand as well. But what kind of drew you to this category, Will?
So we've been trying to figure out what to name this category or what direction we wanted to go ourselves at Forgepoint. The company that we invested in sort of as a founding investor is a company called Symmetry Systems. I'm wearing their jacket today. And this was an investment that we made about 3 years ago. And back then, the sole focus was, hey, data stored in public cloud is going to require different solutions. And it's going to have different problems. And this is an interesting problem that we would like to try to figure out how to solve, especially when you consider how important data is to whether or not into an organization, right? Like one phrase I say often is the difference between a security incident and a data breach is data. Once you lose that data, especially if it's PII, HIPAA, PCI, et cetera, that's when you need to start getting lawyers involved, and regulators will start wanting to get involved as well. And so, of course, data being stored in cloud is going to be something that needs to be protected. I'm really happy it's landed at DSPM, and exactly to your point, like the way you phrase it is exactly right? Because when you say data security in cloud, sometimes people think, oh, are you talking about SaaS? Oh, are you talking about DLP? Oh, like there's all these different versions, because it is a little bit too high level to just say, hey, cloud data security. And so in that way, I thought it was brilliant that we were able to, that Gartner, I'll give them credit for coining DSPM, was able to draft off of the momentum already around CSPM into this space. I think the next step will be fun, is that next is figure out what the heck does DSPM even mean? Right? What do you do? What is the outcome? What's the result? How do you do that? How do you get there? What is the best company? What's the best version or style that fits for me as a customer? And so there's still a lot to get figured out on the DSPM route. But at the highest level, it is focused on hybrid/public cloud security, and specifically looking at that security with a data lens.
And if I'm to guess, most of these approaches start out the same way. People don't know what they have. They don't know where it is, what state it's in. So I imagine step one here is some kind of data discovery, and then some kind of effort to identify what kinds of data that you've discovered.
You're exactly right. Right. Yeah. I mean, I think when I love looking at NIST CSF framework. We also have the version of the cyber defense matrix with Sunil, who's also a fellow tinkerer. I've also modified that for Forgepoint's purposes and simplified it. But I really like looking at that model, because when you start looking at a new category or a new set of problems or new assets that you want to protect, it is really nice to be able to bucket into those 5 use cases. And I agree with you almost 100% of the time. The first one is going to be around visibility, inventory. You can't protect what you don't know you have. In some unique cases, sometimes it goes straight to firewall, where, okay, I'm not going to focus on data in motion, for example. I'm going to focus on or data at rest. I'm going to focus on data in motion from the very beginning. But because of how cloud is architected, and how much data is already in public cloud and hybrid cloud, it made so much more sense to start with visibility. So data at rest versus data in motion.
Yeah. Yeah. And generally, I remember saying when I was at 451 that data would be the last category that we tackle, or data security specifically, just because it's such a tough category, because there's so much of it, putting controls around it makes it harder to use, and making data harder to use then tends to break workflows, slow down businesses. It's just been a big challenge. And it's interesting now that we are, I think maybe it speaks to the maturity of cybersecurity in general, that we're starting to see some more concerted efforts to tackle data security.
Yeah, and actually, the point that you made is a phenomenal one, because, for instance, I've made 3 investments in data security, for example. So whether it's structured, unstructured, on-prem, IT, public cloud, on your endpoints, on your servers, I've sort of built sort of a comprehensive suite of solutions, and I think I could probably go some more. I have 3 now. I could probably make another 3 to fill every single potential data security problem that there is. Because on a macro theme, I do believe in data security being sort of one of the key industries that people will go to after endpoint and identity and all that kind of stuff. So to your point, I fully agree with you. I think the biggest thing that data security vendors in the past didn't do a great job at was that a lot of them went straight to protect and preventing things. And so that goes to your point, right? Which is like, now things are harder it's harder to do business. It's harder to do what you should or you want to be able to do because there's all these controls in front of it. So I personally prefer not going to protection until it's a very well-known problem. And it's a problem that everyone understands, and they're not going to sort of, be upset if you do it. So I think DLP is the closest version of that, where, generally employees know that the content that they're creating at work is valuable, and the company wants to protect it and prevent it from being leaked, both accidentally or purposefully. And so although they don't love that there's a DLP solution that's actively monitoring for data leakage, they are willing to accept it. But for something like this, where we start at visibility, prevention is probably going to be the last thing we do. And it's a lot like IDS, IPS, right? Like almost no one turned on protection on the IPS front. 95% were on IDS. And so that's going to be a very similar situation here as well. It's going to be very visibility and detection focused initially.
So Adrian, can I jump in here with a real quick question?
Absolutely.
Yeah. So I'm going to open with a comment, actually. I think you're definitely right. I think, the impact of like cloud transformation, movement of data into the cloud, and the eventual complete erosion of the perimeter, right? And what becomes the perimeter? Well, the perimeter becomes whatever's protecting the data most directly, right? And that's kind of the result of that incredible shrinking perimeter down to the data set, where there is now a need for data security technologies and data security in a general sense of the word. Now, traditionally, that's been very, very difficult to achieve. And quite frankly, I think your commentary you just made on the specifics around the protection, not going towards protection, but instead focusing on visibility detection is 100% the right way to tackle this, because if we can't build that fundamental visibility detection and ability to see what's occurring, protection is a guaranteed fail and will become a friction point and eventually stop that whole market from growing. My question is, how long do you think that transition takes? And is this a situation where we never get to it? Similar to IDS, IPS problems, exactly as you've identified, IPS never got turned on. Is this a transitional state where it's like, hey, we're just going to maintain visibility, track and react whenever those situations occur? Or do you think we'll actually turn on protection at some point in the future? And if so, what's that timeline look like?
Yeah. So I love drawing parallels to the endpoint space when I think about this. I think that out of all the different spaces or controls within security, endpoint feels to be the most mature. And so you can sort of look at that as inspiration for the other layers as well. And so will we ever get to prevention, protection? Yes. Okay, let me take a step back. We will get to there in cloud hosted data. It'll probably take a very, very long time. And the key catalyst that will turn us from wanting to go from detection to prevention is going to be significant pain. So lots of incidents where people are losing data because of it being hosted in cloud. People are hiring lawyers and incident response, and they're dealing with regulators, where that pain is so high that people can start going back to their organizations and say, hey, this is just unacceptable. We can't let this happen and be chasing response all the time. And so that's so I predict that minimum at least 5 years out, more realistic 10, 13 years out, when we can actually get to real prevention. And by then, who knows where we're going to be hosting data? Maybe we'll be hosting data in chips in our brains at that point. I don't know, just making some weird sci-fi analogy, right? Because we keep on changing things over and over again. And so I think it takes a really long time to get to prevention. And we will get there with regards to cloud hosted data. But when that point comes, we might be thinking about data stored in another medium as well.
Yeah, and I think part of the difficulty here is what I like to call the customization tax. So there's only so much a vendor can do to make a product work for your scenario, for your data, for your workflows. And to get to prevention, I think that piece has to get into the product somehow. Like you have to, the product has to understand how you use this data, to really fully understand what represents an anomaly, what's good versus bad, those kinds of situations. And I think that's where a lot of this stuff really gets challenging, because every environment you go into, there's some institutional knowledge there, and somebody at the SOC or somebody on the security team will tell you, oh yeah, that's a false positive because we do this weird thing. We've got this weird product that does something that looks malicious, but it's not, or whatever the case might be. Like ideally we do it this way, but this thing works that way. So, we've got to disable certain things in our security products, or we've got to make some kind of exceptions. So, I mean, just my thoughts on why I think it's so hard to make that leap to trusting something automated to, not send a piece of data, or to not allow somebody to view it, or, to make some kind of active decision on something.
Yeah, I mean, even going back to DLP, which has been around for such a long time, right? You think about the reality is most of the incidents or most of the events are actually let through on the DLP front. And what happens afterwards is people go and they go look at whether or not this was actually a data loss or not. And then they figure out what was lost, and then they go and remediate it. The times where it actually blocks something from actually being shared is when it's so obvious. Like, no PII should ever leave a healthcare company ever, right? Like, especially if you're in these groups, like then yes, okay, turn on blocking. But even DLP isn't 90% automated blocking. It's something significantly lower than that.
Yeah. So you do have a, as you're proudly wearing there, you do have a company you're backing in the space. For folks not familiar with DSPM, I think we've talked about Polar before. We maybe mentioned Eureka, but Symmetry Systems is the one that you've backed, correct?
Yes, yeah, it's the one we backed, and in fact, one that we've helped incubate. So we joined the company when it was 2 people, and I remember all these conversations around like, hey, where do we want to focus in this data security journey? How do we want to get there? Who's going to be our target customer? What problem are we actually going to be solving as well? And so 3 years of thoughts. Every other company in this space, was started in the last 10 months or so, and so. I'm hopeful that they're going to need some time to catch up, but as you know, innovation is inherently disruptive, so we can't count on it.
Yeah, the pace of the industry is crazy. I'm kind of tempted to jump to that, but I wanted to talk about a few other new categories here that I found were interesting, and one of them is the one I most people seem to be calling it SaaS Security. See, that's what's on most vendors' websites. I think you had an acronym for it, but I've been jokingly calling it Casb 2.0 because that's how it feels to me.
Yeah, so I actually think there are multiple companies in SaaS Security. And, the way I think about it a little bit is you sort of take sort of the whole endpoint network, identity, data, and all these different sort of assets, I guess, and apply it to SaaS. And then what does that look like? And so to your point on Casb, right? What that Casb is, in my mind, it's a combination of network and data security. And there's a lot of hacks that the industry had to do in order to be able to provide those 2 use cases.
Ugly hacks.
Ugly, right? Like all the reverse proxies and split key, encryption and DLPs and blah, blah, blah. And so will there be a Casb 2.0? Probably. Will there be a much better architecture than what's currently being done? Probably. I mean, it just has to happen just because SaaS is here to stay, right? In terms of us using it more and more. And I personally haven't formed an opinion yet I actually do have an opinion, but it's early enough that I'm not going to say this is the future. I'm going to say this is the hypothesis. People really wanted to avoid putting an agent on the endpoint for SaaS security in the past, especially when SaaS was picking up. That was such a common problem, right? Like people talk, oh my God, I have 20 agents or 9 agents and I can't have agents anymore. And so when Casb first started, that industry or those customers hated agents. And so thus Casb 1.0 cannot have agents. Yeah. And that's what's resulted in the infrastructure it has today. I hope that Casb 2.0 will be more accepting of agents because the performance hits that people feared or experienced back in Casb 1.0 are no longer the case. And so my hypothesis is that the next version of Casb will be provided via an agent because it gives you the best visibility and control and scalability. And then I think what that will mean is that it would also split the network portion of SaaS security into its own bucket of companies. I think it will minimize the size and importance of the network security part of SaaS security. But network is more broad than just SaaS security anyway, so it'll be fine. That industry will be fine. And then I think what will also happen next is the vulnerability management space of SaaS security will also become more important in the future. And so the acronym you mentioned that we talked about before is SSPM. So it's another posture management category, SaaS security posture management. And I think that space will pick up in importance. I'm still trying to decide if SSPM will become so large that it'll be able to support multiple public companies. I haven't solidified my decision there yet, or my hypothesis there yet. But I do think that it will be an important enough category that people will want to educate themselves on it. They'll more likely than not purchase something in this space. They'll use it, and then perhaps it gets acquired by another company, but they'll probably keep using it over the long term because of how much stuff is in SaaS now.
So with regards to SaaS security, Will, unless I misheard you, which I might have, you did say that agentless is the way to go. So what's the collection mechanism, API collection through all my SaaS vendors that I use to pull that asset or data or metadata information into a platform that looks at configuration, metadata, and stuff like that? Is that the vision for this market?
So, so SaaS 1.0, I think was agentless, and it had to be, but I think SaaS 2.0 might actually be with an agent.
And how does that agent happen to reside? Would it embed into the SaaS vendor's product, or how does that actually operate?
On that point, or on the different devices.
Oh, at the other end.
The customer of the SaaS product, yeah. Yeah, because this like Casb started out as a like shadow IT discovery, like find out all the SaaS apps, all the places your corporate data is going that you don't know about. And they would ingest your firewall logs or, proxy logs, whatever, and tell you all the SaaS applications that your employees are using without permission or something like that. And then it moved into more the management of it. Like we can give you additional security controls that your SaaS vendor doesn't give you, or maybe you don't like the fact that there's a chat mechanism in this one SaaS app. We can delete that.
Sure.
Basically in line, we're just removing a feature of the SaaS app that disagrees with your, corporate security requirements or what have you.
Yeah, so I definitely now get it in theory, understand what you're saying, but now I want to talk about double click, Will, on market dynamics with regards to that. Doesn't it make sense then for the endpoint vendors, since they're already on endpoint with agent in line, that they can extend into this market as a natural adjacency?
Yes, I think so.
Yeah.
I think the space is early enough where you say, hey, SaaS security will be instrumented using an agent. And everyone with the agent will say, yes, I want another market to cover. And so they'll be delighted to be on that front. And then the people who are anti-agent will say no, because there's so much activity that's happening in SaaS, in the SaaS app itself, that the endpoint agent will never have visibility into. And so I agree with that point, but instead of saying, hey, we need something to monitor all the activity that's happening in the SaaS app itself, that's when the SSPM part for me comes into play, where let's use a vulnerability management lens on what's happening in the SaaS app instead of a network security lens.
Yeah, it's interesting because like I covered Casb very closely when I was at 451. That was my very first category that I covered, and I covered it right when it was starting in 2012, 2013, and had a lot of conversations where basically, if you want the best coverage, it's going to have to be some kind of hybrid model, was the conclusion that we came to. Like certain things you only know if they happen if you're looking at the API. Like for example, if I share a file with somebody outside my organization, if you've got something capturing an endpoint or in proxy, you're not going to see that kind of stuff, that stuff happening. So there's all this stuff that you can only get from the API. So, I think any full solution here is going to have to be API plus something else, or at least they convinced me of that back then.
No, and even this SSPM, all the SSPM companies inherently are API based, right? They're plugging into the APIs to look for configuration issues, and so they can also look at all the activity that the API provides you as well. And so, there could be a company that does exactly to your point, where they have an agent on the endpoint to do the endpoint related stuff, and then they also have the API based version of doing what they're doing. And one company could do both, but it could also be two different companies as well. It really depends because, for instance, let's CrowdStrike on the agent side, EDR side. Will CrowdStrike ever get into the SSPM space where they're looking at all the APIs from all these SaaS apps and then giving you alerting and configuration improvements on top of that? Maybe one day they will do that, but that's pretty far outside their core, so unlikely. And so I think it'll be two different companies, but both very important businesses.
Yeah. All right. I think the last one here, the last new category I found was interesting, are enterprise browsers. This one just hit me. I was blindsided to this. It was another category that I covered. All the kind of, you run this tiny agent and your Chrome browser is actually running in a data center somewhere, with the idea being, if something malicious happens there, we can shut it down, whatever. So there's this whole secure browser. I say whole, it wasn't a huge market. It was maybe 10 vendors max back in the day. None of them had a ton of funding. I think everybody understood it was kind of a niche use case. And had some, this kind of idea of isolation, had some useful use cases. We actually had somebody who originally worked for Bromium was our first interview today. So clearly that niche still exists. HP acquired that product. Some of these still exist, stuff like Menlo Security. But yeah, these new enterprise browsers are different. It seems like a different approach where they're focused more on, I don't know. What do you think about this market? It seems like it's more about adding controls that don't currently exist in browsers, giving you more control, but they also talk about performance, like making things easier on the employee as a potential value prop for this thing. So not even necessarily a security value prop. I've been having a hard time getting my head around it.
Yeah, when I was right before when I was talking about Casb 2.0 could potentially be instrumented to be an agent. The folks in the secure browsing world would be like, yeah, it is. It will be instrumented to be an agent, a secure browser. And so there's a possibility that the secure browser is that architectural change that enables both, SaaS security and other ones. The secure browser's argument is, hey, before we had all these agents doing different things on your operating system, on your endpoint, why don't, instead of putting it on your operating system, let's put it on the browser, because browser is how we do all of our work. And so, your data security, your network security, endpoint security, et cetera, et cetera, et cetera, let's put that all in the browser instead of on your actual operating system. And so that's the pitch. It sounds really compelling. For me, I'm still digesting whether I agree that that's going to be comprehensive enough for large enterprises and for the foreseeable future. My current gut reaction is more likely than not, these secure browser companies are going to take their browser / agent and they're going to do things outside the browser once they're on these endpoints in order to provide complete coverage for all companies. And they have to provide complete coverage for all companies in order for them to become as big of the businesses as they aspire to be. So that is my current guess. And so for me, it feels like a sneaky way of getting an endpoint agent on the operating system versus, hey, now everything's happening in the browser.
I mean, some of the use cases I saw shared, worried me a little bit, because they're talking about enforcing, the way customers do one thing or another. And, the first thing I thought is, okay, so now, almost immediately with this product, we're going to break somebody's workflow and they're going to look for a way around this product. They're going to open a different browser, or if we're preventing that, they're just going to go to a different device, and we end up pushing the problem, making the problem invisible rather than solving it.
Yeah, I completely agree with you. Completely. I mean, I think at its core, right, when you think about user, endpoint, whatever, IT more centric related security problems, like at its core is MDM. Like you really are doing is you are deploying things onto these things, making sure they're deployed and making sure they're doing what they're doing. And so, my opinion is that you should make the MDM as amazing as possible. Like a little mini SIM, for instance, on each endpoint. That's obviously efficient, not crazy like our modern SIMs. I think that would be much more interesting in my mind. And one that's scalable, works across all these different operating systems and legacy, new, small devices, et cetera. Anyway, this idea I just said is probably like 5, 6, 7 years out. It's a pretty long time before we're going to do that. And perhaps before we even get there, Microsoft or Apple or Google or someone makes it a reality as well. But yeah, the secure browser, jury's still out for me. The historical customers, to your Bromium, Menlo, were financial services customers as well as federal customers. They more or less survived off of those two key verticals. And so I have seen financial services customers or ex-financial services customers say really good things about secure browsers. And for me, that's not a surprise, right? This is a better version of what they've seen in the past. What I'm really looking for is, CISOs in other verticals lean in strongly and say, oh my gosh, I need this yesterday. And not in the short term, because in the short term, there is quite a bit of hype right now that's being created for these companies. I'm more interested in how aggressive they lean in 2 years from now or 3 years from now. And we'll be able to see how important or how true or how right this bet is when we look at renewal rates and upsells and all that kind of stuff. But for now, people are leaning in. People are experimenting. Some people are even purchasing and using it and deploying it and being positive references. And so I think this is the beauty of innovation, right? Someone's taking a bet. They're betting their careers. They're betting their relationships. They're betting dollars that investors are providing them or their own. And I think the best thing we can do is hope that they're successful. Hope that they prove that they're right, because they will inherently. If they're right, they'll have created value for the whole ecosystem, not just for them.
Yeah, it's interesting. I follow this space and have followed this space for quite some time, and you blew my mind a minute ago in a very positive way by equating the browser to the agent. Never occurred to me we can abstract the agent off the OS.
Yeah.
Bring it up into the browser level. I literally had that moment of, oh, shoot. Okay, yeah, I see where he's going with that. But really, I get it. But if we put ourselves in the value of the company, there's no delta in value between being at the core kernel, user land, or browser. It makes no difference as long as it's enforceable, non-bypassable, et cetera, et cetera. It makes no difference to the buyer. All the buyer cares about in this market is transparency of the user experience, meaning it looks no different than if I just use my normal browser. And that's why the proxy-based protections Or agent-based at the kernel level protections have taken off and done so well because they're transparent to the user. The user doesn't even know they're there in an ideal world. Now, obviously, when the agents blow up, suck down too much power, too much memory, things go sideways, they get pissed off, and that's when, the agents get a bad rap. But if you create the agent no matter where it lies in a truly transparent manner, then it doesn't matter where you put it. And if you put it in the browser, that would be the only way that I would see that this would be a successful market, is if that browser experience is literally identical. You can't tell the difference between your browser and a general Chrome browser. Then maybe it becomes a successful way of implementing something that's already achieved at the OS layer. So I'm not sure that it overtakes it because there's, a hurdle on UI and not much difference in value add by moving it up higher in the stack.
Fully agree. And that's, I think, the cost risk to this market is that everyone's building on top of Chromium, right? And so if they want to provide a similar, if not better experience than Chrome, they need to have as many engineers or more than Google. So that's going to be expensive.
Yep.
Yeah, and it's a crazy market. We've got two companies in this market. For people listening who aren't familiar with this, the market that we're talking about, the two key examples here, or at least the only two I'm aware of, are Island and Talon. And $250 million of investment in them. Like, hadn't heard of an enterprise browser as a thing 3 months ago, and already $250 million in this space, and it's just crazy how quickly this happens. But yeah, in the old market, like with isolation on the endpoint, Bromium and Invincia were really the only two in that market. So that was another kind of two-player market. Invincia did a pivot out of it and went towards next-gen AV instead, and got acquired for a pretty good amount from by Sophos. So I'll be interested to see if more jump in here, because I think you need a lot to, even building on top of Chromium, like, still the engineering effort here is huge. All right. Let's move on let's zoom out a little bit. And, Will, something I wanted to get your opinion on, and I think we've talked about this offline quite a bit. We've talked about on the show quite a bit, but just the state of the market right now, the size of valuations, the size of some of these rounds where we're seeing, particularly, I think Island is a great example here. They raised a Series A and a Series B back to back for a total of $215 million. And then we saw a bit of what looked like, maybe pulling back a bit, but I think we talked about that being just in later stages. What's your view of the health of the market in general, and whether or not, do we have, too much money in some of these late stage rounds, or the valuations too crazy? I mean, surely they can't all have public exits. And, what's the general health of the market here? We might have lost Will. We're seeing.
Well, while we wait for Will to come on, I'll go ahead and answer that question. The markets are crazy out of whack. There you go.
All right, moving on. Next question. Hopefully we get Johnny, Gus, let me know if we get Will back. But So Adrian, I only said that half joking. I will make a little bit of commentary on the state of the market myself, because I do watch it fairly closely. Obviously, I'm not as in depth with Will, and I would love to hear his answer to this. But I feel like we've seen such a compression in the last 3 to 4 months in the public markets that the impact on privately held companies and the ability to catch super high valuations is absolutely compressing and getting squished down. We've seen companies like Airtable take a 50% write down on their valuation. We're seeing, and that's not a security company, but it's a reasonable high-tech, high-growth company that we can comp against. And since cybersecurity companies in general have been so overvalued compared to non-security companies as well, I don't see how some of these massively funded companies can continue
to have those valuations in the current state of the public market. So it would not surprise me if in the next 6 months we start to see some write-downs on some of these late stage, stage E, F, G companies that are valued at anywhere from, let's say, 8 to 30 billion in a privately held space with negligible revenue.
So
yeah, approaching.
There have been a few companies that have done write-downs in the recent past, and I've heard from certain people in the industry that they think that's a terrible idea. They think it's a deal killer. They think that companies are perhaps positioning themselves so that they'll never get funding again. What's your opinion on that?
Yeah, I can definitely comment on that. So these write-downs for these late-stage companies that are, valuing themselves down at 25 to 50%, the reason is they can't attract talent. They can't hire. Because if you are valued at 80 billion on 20 million in revenue or something ridiculously tiny, it's going to be impossible for you to hire as a company, because everybody looks at it and goes, for me to get upside, we have to go from 20 million to 200 million just to justify the valuation. And I'm making these numbers up, they're not accurate, but I have to have some kind of astronomical growth rate on revenue before I can get any upside on my equity that I'm making by coming to this company. And I've actually, been talking to people that we're recruiting for Jupiter One, who are talking about other companies that they're interviewing at, going, yeah, I'm not going to company X because they're valued too high and there's no upside for me. So I think you're going to see such a crunch in the talent market, not wanting to go to these overvalued companies, that the write-downs are going to make it possible for them to again have the ability to recruit.
Perhaps, but do you think the perception of a company who writes itself down is that, they're in trouble? I'm talking strictly about perception.
Yeah, so it depends on how they're managing the business. If they're managing the business with that money to at least have a path to profitability and create a business growth model that is sustainable on their current cash, then it doesn't matter, right? Because they're going to build a company that's going to be sustainable, profitable, and have potentially great growth rates over time, and eventually will IPO, and they will get past that markdown pain, right? But I understand your point, and there will be certain companies that take that internal write-down or value write-down, and then don't manage properly to a break-even or a profitability stage for the company, and then it will be harder for them to raise again, because they will have had to either accept a cram down or a write down for a bunch of late stage investors that are now underwater.
Yeah. So Will, pulling you back into the conversation here.
Welcome back, Will.
You can get.
Hey,
you can get the. No problem. We just rolled in. We were rolling into the next topic, so it worked out pretty well. But yeah, we're talking about we're approaching 60 unicorns in security. They all can't have IPO exits. Crazy late stage funding, and maybe seeing a little bit of a correction, but maybe only in the later stages. So wanting to get your opinion on kind of the overall health of the security market. Do we have too much late stage funding, or do all those valuations have to be rewritten, basically? What do you think?
Yeah. So whenever I think about this kind of thing, I really like Warren Buffett's way of thinking about the world, which is he invests looking at GDP growth and valuation growth. More or less. I think it's an oversimplification, but you look at those two in conjunction with each other, right? And so valuation isn't growing as fast, growth isn't happening as fast as GDP. Theoretically, things are undervalued, and vice versa. If valuation goes up significantly faster than GDP, then things are overvalued. And so GDP in the security industry is spend, and then valuation is the companies that are involved in garnering that spend to solve problems. I think it's pretty easy to say valuation growth is significantly higher than security budgets, and so inherently there's going to be a correction. And my personal feeling is that the industry has been insanely aggressive. And so I can't decide yet where the inefficiency or where things are going to fall down. If things are going to fall down because valuations were too high, and so when they raise the next round, inherently they won't be able to achieve, the same lofty goals no matter how quickly they grow. And so it's not a nice straight path in terms of valuation growth. Or if it's going to be a situation where there's just too much funding in too many companies, so it's so inefficient. And so companies don't grow as capital efficiently as they could have, and thus they're not going to be worth as much. Or perhaps, and so there's going to be inefficiency there. And I think the third one is just sort of a combination of the two, but also different enough to call it out, which is just around sort of like high risk, high reward kind of ideas. And so what happens is, we're of course in the flip side of high risk, high reward is also high loss. And I think it's pretty safe to say that we've been in a high risk scenario. And so there are likely going to be companies that still do incredibly well, even though people took on such high risk, and so well that even at $1 billion valuation and 100x revenue multiple to get that to that $1 billion, for instance, or last year sometimes even more, where people are still going to do incredibly well because the market's still growing, that kind of thing. But that's going to be a smaller portion than the companies that do incredibly poorly. And my personal experience has been that when you take this high risk tightrope situation, there is usually no safety net. And so those companies, like usually in security, most companies have a safety net. And even though the downside scenario, everyone walks away okay.
Yeah. So we're actually going to get to that. That's going to be my last question, is around that point, actually.
Okay, I'll pause. But I don't think there will be 60 public companies in security, right? For instance, that's just not reasonable, not realistic. I want there to be. Yeah, it means if it does happen, that means the industry has exploded in growth, and we will all be better for it. But I think it's hard to say that's likely going to happen.
Right. Yeah, and it's and kind of my final question here. They were a couple of days ago, earlier this week, CB Insights came out with an article profiling 224 of the biggest, costliest startup failures of all time, and there's not a single cybersecurity company on that list. So kind of the final point, the final question here is, why do you think? I think it's like the general 80-20 rule in startup land is that 20% succeed and 80% fail. And it really feels like that's completely flipped in security. Like even being conservative, that maybe 20% fail. Maybe it's even less than that, it seems like. And by fail, I mean, nobody acquires the IP like it's, it's a total write-off. I mean, we see security companies sell for less than they raised, but more often than not, it seems like they're successful. So the question is, what makes us more resilient? Yeah, I don't know if it's going to continue. Like you said, with this many unicorns, I'm not sure if that can all be absorbed, but. Why is security so resilient here in startup land versus other verticals? Or is that just a bias from me covering the industry? And maybe that's not actually the case. Maybe I'm just not seeing all the failures.
Yeah. I think it's a lot more fun to talk about consumer failures or failures if companies are just much more understandable, including like, for instance, Theranos, for example, or WeWork. Even though those aren't consumer, they're still fairly understandable businesses. Cybersecurity has such a huge learning curve. It means that if you want to cover cybersecurity, you have to cover cybersecurity. There's a lot to learn. And so what I think that means is some of the failures in security don't actually come up in use. And so I think there's an underreporting component to all that.
Okay.
The second one, I think it also has to do with the industry as a whole. I've been in security for quite a long time now, and I still remember when security was not popular or interesting, and it was a niche, and people thought that they were going to even in venture, they didn't want to specialize in security because they thought it would not be a good long-term career path for them, for example. Meanwhile, at the same time, we decided to start a security only fund. So
right.
we obviously bet the opposite direction, but and obviously that's worked well. And so what that means is there's also underfunding in security, in my opinion. And if it's underfunded, then it's also a lot easier. There's also a lot less of inefficiency. And it also means that companies will get out sooner as well. So, there are businesses that were slowly growing to $10 million being sold for $100 million, when the industry is underfunded. That same company would have raised $100 million in this market and then some, for example. And so the acquirer in that scenario is not going to buy this business for $100 million. They're just going to let it go to zero because, it's on a death spiral. People are leaving, people aren't happy. Founders have all this drama, customers are saying negative things. I think as an acquirer, if I was in that scenario, I'd just say, I'm just going to build this myself. Why take on, let's say, for instance, $200 million of pain when I could just build this internally myself? So this goes back to that analogy I brought up in terms of the tightrope, where there isn't a safety net. It's really hard to save a company that has inefficiently spent $200 million. It's very unlikely that that $200 million spent is that company is going to get acquired for $200 million.
Yeah. All right, Will, this has been amazing. We appreciate you being generous with your time and coming to chat with us about these new categories and state of the market and all this stuff. Thank you.
Of course. Always happy to share. And these are all hypotheses. I could be wrong. In fact, I love being wrong.
Yeah, I mean, that's the whole purpose of the conversation here. I think we're definitely seeing a lot of stuff that we haven't seen in the past. Security, well, I think that's why, at least that's why I'm in security, is everything's new and it's always changing, so it never gets boring. And that's my greatest fear, is to get bored in a job. So it works for me. All right. Thank you so much. We'll be right back in a few moments with the weekly enterprise news.